We had a multi-year kind of pullback, and then it's formed this kind of cup and handle formation, this base, and then it exploded to the upside. Well, we've kind of had a similar pattern where it's broken down, it's forming this huge potential rising wedge, this cup and handle formation, and we could very easily see that go back up to that $50 an ounce point and potentially go way beyond that. So there's a lot of explosive power, and you can just see how quickly silver can run.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Yeah, thanks for having me.
We're having you back on because really things are moving super fast. Last time we had you on just a few weeks ago, you were talking about how this was a critical turning point for gold because of what the US dollar was doing. And we could see gold rise or fall, even fall back to about 1600. Now, since then, we have seen a rally up to about the $1,900 level. And I think the key question right now is, has gold broken out above that, downward trend line that we've been seeing since August, or could we see gold fall further?
Yeah, so we are at a really critical turning point, and I'm just going to flip over to my screen real quick, and I'll show you what I see on the charts on some different time frames here. So this chart here that you're looking at, this is the monthly chart of gold. It goes all the way back to 2002, and it's pretty clear we are in this major super cycle to the upside. It's been out of favor for a few years, flagging out, and now we're starting that kind of breakout, that run. And this is the first major kind of pullback from these all-time highs that we saw in gold. You can see in the last month, we've had a really strong push up. The dollar's been falling. And typically when people get a little bit nervous about equities markets and what's going on with all the printing, we tend to see precious metals start to do well. And that's what we're seeing right now. Now, if we were to zoom in on this monthly chart, zoom in on this a bit here, you can see we've got a falling trend line from these wick highs. You don't need to, you can ignore the percentage. I'm just showing this line here. You can see this month we're starting to break out on the monthly chart. And this is a big bull flag pattern. It's pointing to much higher prices. In fact, if we take a look at where price could go based on this current bull flag momentum here, we can get a really good feel. If this price can hold, then we're going to go quite a bit higher. We're looking at $2,600 an ounce for silver for gold. And based on this pattern, we are looking for that to run. It could take 1 to 2 years for that run to happen. Now, I think a lot of people think it's going to happen much faster than that. But based on this chart pattern, how it took 2 years for it to go from the low to the high, it's pulled back for a year, and now it could very easily start. It could take a year or so or longer to get back up to those new targets. But that's what's really interesting on the gold chart. It's starting to break out. Now, on a monthly chart, you need to wait for monthly closes. So we're still another day or so away from that. I think Monday is the last day of the month. So that'll be a really bullish sign. Now, we could drop down to the daily chart here real quick. And you can see on a short-term basis, we've had a very strong run, that trend line, how it cuts through this chart. And this green line across here, well, this is the 200-day moving average. So finally, gold has broken above that 200-day moving average. And really, the 50-day, we want to see the 50-day above it as well. That's really the sign that we're in a full-on new bull market. So by the looks of it, we are still another week or 2 or 3 away from price of the 50-day getting above the 200-day. And if that bodes well, if that happens, hopefully we see the price of gold actually trade sideways here, form a little bit of a bull flag pattern, which means it's the halfway point, and then it could take another run higher and go up to test that $2,000, potentially $2,100 level. So there's a lot of exciting things taking place in the precious metals sector. Gold miners are starting to come to life, silver miners. And a lot of this is hinging around, the dollar is testing very critical support levels, the dollar index. If it breaks down, that I think is going to spur on a really big move in precious metals. So that's kind of where gold stands at this point from a short-term and long-term perspective.
You've mentioned how the dollar could rise and that could put pressure on precious metals. So are you expecting that, or are you looking for the dollar to fall?
It really doesn't matter. I mean, obviously, if you want higher precious metals prices, we need to see it break down. Now, right now, the U.S. dollar is holding above support. I do think eventually it's going to break down and collapse, and that's going to spark a great big move in precious metals. But at this point, I mean, it is at support. It's a long-term support going back many years. The odds are it's going to have some type of bounce, and we could see that happen, and it could take a couple of months. And we could see gold, if we look at this gold chart and just zoom out just a little bit here, and we look at this pattern, we could very easily see gold flag down and kind of build more of a base, some type of launch pad for the next run higher, to go up here. So it depends a lot what the U.S. dollar is going to do. Eventually, I think it's going to break down and continue to weaken. We're going to see commodities and metals go higher. But short term, I feel as though we're going to see the dollar bounce, and we're going to see gold pull back and trade sideways for a little while. And all that will actually be a strong sign for the price of gold. It'll get the moving averages all in favor. The 50-day back above the 200-day gives that kind of bullish cross. So all those things will kind of come together. And really, you got to be patient with the markets. The markets almost always move a lot slower. Patterns take a lot longer to unfold than you ever anticipate. So it's just a patience game. Gold is a long-term investment. It's a long-term sentiment shift in investors. So it's not generally going to happen very quickly. And the pattern size that we're looking at on the monthly chart clearly shows it's a 1 to 2 year pattern for the next upside target to get hit. So you just kind of sit back and let it mature.
You mentioned last time how it was possible gold could fall to 1,600. That seems kind of unlikely. Now you're looking more for just a sideways move. Yeah.
So now that gold has got above the 200-day, it's broken this following trend line. Precious metal miners are starting to break out. The odds of it going down to 1,600 are pretty diminished. The trend is back to the upside on the short-term basis as of this month. For an investment type basis, it's breaking out, starting a new rally. So I'm looking at higher prices here, not 1,600 anymore.
Now, it's interesting what we've been seeing in the last few weeks, how gold has been outperforming silver. This is kind of a flip from what we had seen before when we saw gold falling and silver kind of just moving sideways. Do you want to kind of share with the chart what we're seeing in silver right now?
Yeah, well, silver has been holding up really well. It's been trading sideways while gold and gold miners have been selling off for several months here. More or less, silver's got a lot of upside potential. It moves percentage-wise a lot more. I think there's a lot of speculative traders kind of moving into silver, hoping we're going to get some great big, huge short squeeze and see it pop and rally. And silver typically outperforms gold. That being said, gold typically will hold up a lot better when it does top out, where silver will collapse and give back a huge chunk of its gain. So silver is definitely not like as steady as gold. But when you look at the silver chart here, it's had a nice run. It's been trading sideways, and it's very close to breaking out. I mean, it really needs to kind of break $30 an ounce for it to kind of really fully kind of break out and start another run. And there's a lot of upside potential in silver percentage-wise. I really think you need to own both. I'm not a huge fan of moving into one or the other, because the market always has a way of moving the one that you don't own. I think the whole basket of precious metals is the best play. It's not about trying to make as much as you possibly can. It's trying to make sure you're going to catch the move and you're going to catch most of it. So you need a little bit of a balanced portfolio owning gold and silver and gold and silver miners as well.
Most of the people I've been talking to are more bullish on silver than gold. And therefore, I mean, in my perspective, it seems to make sense to have greater emphasis on silver in your portfolio. But what is your perspective?
Yeah, I agree. I mean, it's got a lot more potential. It's much more volatile. And we're all looking for gains. I'm probably about 65% silver. And then the rest is gold, when it comes to long-term positions. If you want to get really active and you're a very short-term trader, I mean, you could definitely be heavier weighted in silver. So most people seem to be heavy weighted in silver just because we know when it pops and runs, it's going to have a substantial move. I mean, we saw some of these huge moves. You go back to 2010 when we saw this explosive rally where it went from $19 an ounce all the way up to pretty much $50 an ounce. And that type of scenario feels like it's actually playing out again. If you look at this chart, we had a multi-year kind of pullback, and then it's formed this kind of cup and handle formation, this base, and then it exploded to the upside. Well, we've kind of had a similar pattern where it's broken down, it's forming this huge potential rising wedge, this cup and handle formation, and we could very easily see that go back up to that $50 an ounce point. And potentially go way beyond that. So there's a lot of explosive power, and you can just see how quickly silver can run. Most of these big rallies, when you look, are very quick, very substantial. If you're not in place, it's almost hard to jump into silver after it's already run 20, 30, 40%. But there's some huge moves in silver, and you kind of sometimes just have to be positioned in it. And that's the nice thing about owning physical metals is, it forces you to kind of hold on to them and stick with it. Whereas short-term trading, it's easy to get chopped up and miss some moves. So I think there's a lot of upside potential here for silver to rocket. You never know when it's going to happen, so you kind of need to hold some.
It seems like the first cup and handle back in 2008 to like 2011 or so is quite small, but then we're seeing a larger one, and it took longer for that to play out. So does that mean it would also take longer for that rally to 50 or above?
Not so much, I don't think. I mean, typically you look at the depth of the cup, which you can see there's a support level across here, and then it broke down. So you kind of take the depth of this cup, and then you can just stack it on top of where the upside potential will be. Generally, a cup and handle pattern is 2 to 3 times the depth of the cup. So take this and you times it a couple times up here. You'd be looking somewhere way up here in the 70s, 80s for silver going forward. Now, just because it's kind of dragged out sideways, I don't think that's really going to extend it. I think this type of pattern is actually very similar time frame and size from this bottom and this flag that I think it could be very explosive and move higher. Now, keep in mind, it's silver moves very quick. It would probably happen within a year type of play, whereas I think gold would have a little bit more momentum and drag out. But silver tends to lag gold in most cases. We see gold rally and take off, and silver can lay dormant for a while, and then suddenly out of nowhere, silver plays catch up to gold. So we could, that's one of the scenarios you need to be aware of, is sometimes gold will keep running and moving. Silver doesn't budge, kind of like what it's doing right now. And then suddenly, the resistance disappears and the price just rockets higher. So I think they're both going to be moving up at pretty much the same time, give or take a few days or a month or a few weeks or a month or so difference. When they start to run, they're both going to be running pretty much in sync with each other.
Now, our viewers are also, many of them are also very interested in the cryptocurrency market, and we've seen quite a pullback recently in that. What is your take on what's happening with Bitcoin right now? Is it concerning? Do you think it could fall further, or what is your perspective?
Yeah, so Bitcoin, the futures data that I have here on my chart doesn't go back very far because futures really only started in 2017. But if you go back and look at Bitcoin all the way back to 2010, it's had a series of these type of rallies where they go parabolic. It's a bubble, and then it bursts, and then it collapses. It's done it 6 times in the past. On average, it's fallen about 73% every time it has done this. And if we look at the current kind of pop in this bubble here, it's pulled back 54% so far. The average is 73. So there's still another, potential 20% downside in Bitcoin, bring it somewhere down to 16,000 or so. I'm not saying it's going to happen, but I mean, it's happened 6 times in the past. Bitcoin is super volatile. This is just how it moves. So it's nothing out of the norm by any means, but it's definitely not in a bull market anymore. It is, if something sold off more than half of its value, you can't say it's still super bullish in the current time frame. It's going to take a while for this to kind of mature and play out. And more or less, when you go back in time and look at all the other bubbles in Bitcoin that have popped, It takes them about a year or more to build a new sideways base, a new kind of launch pad where it just kind of eventually fizzles out of favor. And then eventually it'll start to pick up speed and start to rally. It'll start to break out and move up, and then rinse and repeat. Everyone chases it, piles in. It creates that same feeding frenzy. And this is what happens in stocks and commodities, crypto. It's all the same. It's human emotion. That's what drives this thing. And that's why chart patterns work the same for pretty much any asset class. You can look at the charts and you can get a feel for how crazy excited people are, or how fearful they are, or how complacent they are in the market. So I'm pretty neutral on Bitcoin. I think it has potential to continue to collapse. I think it's going to be out of favor. It's not going to start another big major bull market run for quite a while. So the best thing is to let it shake out, let it build some type of platform. And when it starts to show signs that it's making higher highs again and moving up, that's when, I'd be more interested in getting back into it.
And with respect to the stock market, we've been seeing kind of a consolidation recently. Are you still bullish? Do you see more upside potential?
I think the stock market here is getting a little frothy. I think there is more upside potential. But this year, we've definitely seen the stock market put in some pretty big rotation, meaning the leaders of last year are not the leaders this year. They're actually some of the worst performing sectors so far this year. And when we see stock market rotation where big money is moving out of the leaders, that's typically an early warning sign that money's starting to go a little bit to cash. They're looking for fresh places to put money. But really, there's a lot of mixed sectors right now that they're not all firing on all systems. We're seeing about half the sectors trading in a short-term downtrend. And that's not good. If the stock market's kind of grinding higher with fewer and fewer stocks supporting it, it means it's about to stall out and have some type of a nosedive and correct. And I think there's potential for a 15 to 20% correction in the SP 500. Typically, we see bonds perform well. We'll see utilities and precious metals just before that happens. And they can rally for 1 to 2 months before a stock market has this pullback. So we're getting the signs that that's starting to happen. And I think it's something to be aware of down the road. But at this point, the market's still in an uptrend, and you got to stick with it at this point.
And it's interesting because as there's, taper talk from the Fed, that's an interesting timing if we're going to start to see a correction. So it seems like if we would see a correction, maybe the Fed would step in and, become more dovish, which would just be even better for precious metals. Your perspective?
Yeah, I think so. I mean, typically when the Fed makes a big move, it typically always backfires on them or something. It'll be interesting to see what happens. But yeah, I think precious metals are kind of in that perfect storm. As we saw in the gold chart, it's breaking out on the monthly chart. That's a really big signal. People around the world are slowly accumulating gold. I think a big chunk of gold moving up has to do with Bitcoin putting in a top and crashing, I think, and with it being banned in certain countries now, and like in China, Asia there. I mean, they like precious metals as well. And if they can't go in Bitcoin anymore, they're going to probably start buying precious metals again. So I think it's going to add a little bit more buying to it and a little more upward pressure going forward.
All right. Well, Chris Vermeulen, we really appreciate your time today. Before we let you go, did you want to share with the viewers where they can find you and any last thoughts you had? Sure.
Yeah. Well, every morning I provide my pre-market analysis, a little video recapping on what's going on in the markets, what's moving today, what we're looking for. That's a trading newsletter that I offer. And I have a free blog there where you can follow my videos and trade ideas every day for free. So that's at thetechnicaltraders.com. And on top of it, every week on a webinar, I teach my band trading strategy, how to find the best sectors, how to know when to buy and when to own equities and when to get out, because sometimes cash is king. And yeah, so that's about it. And we're getting into a point here where it may be time to be sitting in cash versus holding equities, and knowing when to be in cash really is the critical part. And that's what I teach in my webinar.
If our viewers would like to hear more of these interviews, they can go to libertyandfinance.com in the left-hand corner, subscribe to our email newsletter so they'll be notified of all the new interviews we're doing. Once again, Chris, thank you so much for your time, and God bless.
Yeah, thanks for having me. Take care.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.